Who created the U.S. Patriot Act? U.S. Congress. Who enforces the U.S. Patriot Act? The U.S. Department of Treasury, or FinCEN. Why was the U.S. Patriot Act brought about? To discourage and punish terrorist activities and give law enforcement the tools they need to investigate. Under the U.S. Patriot Act, what requires financial institutions to obtain 5 pieces of information from the customer prior to opening an account, and what are the 5 pieces? The Consumer Identification Program, SIP. The name, date of birth, address, social security number or EIN, and the government-issued photo ID. What's the purpose of the Bank Secrecy Act and the Anti-Money Laundering Act, BSA and AML? The BSA AML requires each financial institution to establish a compliance program and are subject to record-keeping requirements, and its fights against money laundering and financing of terrorism. Under the BSA and AML, when must a bank electronically file a currency transaction report, or the CTR? Deposits, withdrawals, money exchange, or other payment transfer of more than $10,000 cash per day. A completed CTR must be electronically filed with who, and within how many days after the date of the transaction. The bank must retain copies of CTRs for how many years from the date of the report? It's reported to FinCEN within 15 calendar days, and they have 5 years to report it. What report must financial institutions file whenever there is a suspected case of money laundering or fraud? These reports help monitor any activity within finance-related industries. Who is it reported with? Suspicious Activity Report, the SAR. It's reported to the Financial Crimes Enforcement Network, or FinCEN. Financial institutions must fill out a SAR report if they detect transactions of how much money in someone's account. How long do they have to report it? $5,000 or more, and it must be filed within 30 days if identifiable and 60 days if unidentifiable. The SAR report must be kept for how long from the date of the filing? 5 years.